Welcome to Market Brief After Hours. It was a busy post-holiday Tuesday, with major U.S. indexes hitting fresh milestones, geopolitical tensions keeping energy traders on edge, and some massive moves in individual tech and space stocks. To help us make sense of it all, we're diving straight into the numbers. Let's start with the big picture in the U.S. markets. It looks like tech really paved the way today.
It absolutely did. We saw a powerful tech-led rally that pushed both the S&P 500 and the Nasdaq Composite to fresh intraday and closing all-time highs. To give you the exact figures, the S&P 500 gained 0.61% to finish at 7,519, while the tech-heavy Nasdaq jumped 1.19% to close at 26,656. On the flip side, the Dow Jones Industrial Average didn't share in the optimism, losing about 118 points, or 0.23%, to end the day at 50,462. Keep in mind, this was the first trading session of the week since U.S. markets were closed on Monday for Memorial Day, so traders had plenty of news to digest.
And one of the biggest drivers behind that tech surge was Micron Technology, which had an absolutely massive day. What was behind that move?
Micron was the star of the show. Its shares skyrocketed by 19% and actually closed up more than 20% by some measures, pushing its market capitalization past the historic $1 trillion mark. The catalyst was a highly bullish note from UBS, where analysts raised their price target on the stock all the way to $1,625 from $535, citing the massive long-term benefits of its supply agreements. That optimism spread across the entire memory chip sector. Seagate Technology gained 4%, Western Digital jumped over 8%, and the Round Hill Memory ETF, which trades under the ticker DRAM, surged more than 14% to hit a new record high.
That is an incredible move for Micron. But while tech is flying, there seems to be a lot of tension under the surface, particularly with what's happening geopolitically. How is the U.S.-Iran situation playing into the market's mindset?
It's a classic case of mixed signals. On one hand, President Donald Trump mentioned on Monday that peace talks with Iran to end the war were proceeding nicely, though he did warn that the U.S. could go on the offensive if negotiations fall apart. On the other hand, the U.S. military conducted what it called self-defense strikes in southern Iran early Tuesday, targeting missile launch sites and boats attempting to deploy mines. The U.S. Central Command emphasized they used restraint during the ongoing ceasefire, but it kept energy markets highly volatile.
And how did oil react to those strikes?
It was a bit of a split story. Brent crude, the international benchmark, jumped 3.58% to settle at $99.58 per barrel. Meanwhile, West Texas Intermediate futures for July actually settled down 2.81% at $93.89 per barrel, though WTI did bounce back from its session lows immediately after the news of the military strikes broke. Overall, oil is still trading well above where it started the year, which is keeping inflation concerns front and center.
That brings up a great point about the broader economy. With oil elevated and inflation remaining sticky, how are investors feeling about the Federal Reserve's next moves?
There is a real tug-of-war happening right now. On one side, you have investors who are incredibly optimistic that the war will end soon and that the massive wave of capital expenditure in tech will keep driving markets higher. On the other side, the foundation of the U.S. economy remains relatively fragile. In fact, consumer confidence, according to the Conference Board, edged down in May to 93.1 from an upwardly revised 93.8 in April, largely due to the intensifying inflationary effects of the Middle East conflict. Because of these persistent price pressures, traders are dialing back their expectations for rate cuts. According to the CME Group's Fed Watch tool, the market is now pricing in an 11% chance of a rate hike in July, up from just 0.9% a month ago.
A rate hike being back on the table, even at 11%, is definitely a shift in sentiment. Let's take a look at the housing market as well. Did we get any new data there?
Yes, U.S. single-family house prices edged up by 0.1% in March, according to the Federal Housing Finance Agency. That follows a revised 0.1% dip in February. Annually, prices were up 1.7% through March, but analysts are warning that further gains might be tough to come by as the war with Iran continues to push mortgage rates higher, which is naturally dampening demand. Interestingly, despite these concerns, Treasury yields actually fell today as bond markets returned from the holiday. The 10-year Treasury yield dropped over 8 basis points to 4.489%, and the 2-year yield also fell about 8 basis points to 4.04%, catching up with declines we saw in European bonds on Monday.
Let's pivot across the Atlantic and look at how the European markets fared today. It seems they had a slightly tougher time.
They did. European markets edged lower on Tuesday as traders closely monitored the Middle East and Ukraine. The Pan-European Stoxx 600 index finished down about 0.6%. Looking at individual countries, the UK's FTSE 100 bucked the trend, rising 0.31%. However, France's CAC 40 dropped 1.03% to close at 8,173, and Italy's FTSE MIB fell 0.64%. Germany's DAX 40 also lost about 0.8%, which halted a 2-day winning streak. Switzerland's SMI was a minor bright spot, ending up 0.17%.
And what about the economic data coming out of Europe? I understand inflation is proving to be a headache there as well.
Very much so. In the UK, shop price inflation accelerated to 1.2% in May, up from 1.0% in April, driven by supply chain disruptions and higher energy costs from the war. Meanwhile, Spanish producer price inflation spiked to a staggering 8.3% year-on-year in April, up from a revised 3.1% in March. That was the steepest increase since late 2022, driven primarily by a massive 22.3% jump in energy prices.
We're going to take a very quick break, but when we come back, we'll dive into the Asian markets, look at some key foreign exchange levels and moving averages, and cover the rest of today's big corporate movers. Stay with us. Welcome back to Market Brief After Hours. Before the break, we were analyzing the U.S. and European markets. Let's head over to Asia now. South Korea's market had a historic day, didn't it?
It certainly did. When trading resumed after a public holiday, South Korea's Kospi index surged to a fresh record high, supported by hopes of a breakthrough in the U.S.-Iran peace talks. The Kospi 100 index rose 2.91% to 9,815, led by massive gains in tech-related names like LG Enotech, which surged over 23%, and Samsung Electromechanics, which gained over 17%.
What about the rest of the region?
It was a mixed bag. Japan's Nikkei 225 slipped 0.25% just after breaching the 65,000 mark for the first time on Monday. The Bank of Japan's deputy governor, Ryozo Himino, mentioned that the timing of their next rate hike is still being weighed as they monitor Middle East developments. Over in China, the Shanghai Composite fell 0.17%, while Hong Kong's Hang Seng Index was virtually flat, down 0.03%. Australia's S&P ASX 200 also fell, losing 0.39% to close at 8,657, while New Zealand's S&P NZX 50 rose 0.77%.
Now, let's dive into the currency and commodity markets, where we saw some very distinct technical setups playing out. Let's start with the euro against the US dollar.
The Euro-USD pair slipped lower today, closing at 1.1631, down 0.11%. Technically, sellers are maintaining control here as the pair remains below its key moving averages. Specifically, it's trading below its 50-day simple moving average of 1.1659, its 100-day at 1.1698, and its 200-day at 1.1681. If the price holds below the immediate resistance of 1.1645, we could see a push down toward today's low of 1.1616.
And how is the British pound holding up against the dollar?
GBP USD also retreated, closing down 0.43% at 1.3448. The pair actually tested its 50-day simple moving average of 1.3441 during the session. It managed to close just above that, and it's still holding above the 200-day SMA of 1.3423, but it remains below the 100-day SMA of 1.3477. If it breaks below today's low of 1.3434, we could see further weakness toward that 200-day moving average.
Let's look at the New Zealand dollar and the Japanese yen. What are the charts telling us there?
The New Zealand dollar accelerated its losses. NZD-USD fell 0.63% to close right on its 200-day simple moving average of 0.5836. It has distanced itself from the 50-day SMA of 0.5852 and the 100-day at 0.5890, which suggests strong seller dominance. If it fails to hold this 200-day floor, we could see a deeper capitulation. On the other hand, USD-JPY is grinding higher. It closed up 0.28% at 159.32, very close to its session high. This pair is in a strong uptrend, trading comfortably above its 50-day SMA of 158.75, its 100-day at 157.58, and its 200-day at 154.86. Bulls are clearly targeting recent peaks here.
And what about precious metals? How did gold and silver perform amid all this volatility?
Gold seems to be stabilizing, closing virtually flat, down just 0.04% at $4,507. It's currently in a corrective phase, trading below its 50-day SMA of $4,656 and 100-day SMA of $4,791. But it remains well above its 200-day SMA of $4,357. Silver, however, had a much stronger session, advancing 2.06% to close at $77.03. It successfully reclaimed its position above the 50-day SMA of $75.89, though it did face some selling pressure near its daily high of $78.37, keeping it below the 100-day SMA of $81.10.
Let's wrap up with some of the individual stock stories that caught everyone's attention today. Beyond the semiconductor rally, we saw a massive surge in space and satellite companies. What sparked that?
That was triggered by news that SpaceX has filed to become the largest ever initial public offering. That sent a wave of excitement through the entire sector. Redwire shares skyrocketed by more than 26%, Firefly Aerospace jumped over 18%, and AST SpaceMobile closed up more than 12%. It's clear that investors are looking for ways to play the growing commercial space economy.
On the negative side, we saw some big names taking quite a hit. Ferrari, for instance, had a rough day despite launching a brand new vehicle.
Yes, Ferrari's U.S.-listed shares fell nearly 6%. The luxury car maker launched its very first fully electric vehicle, called the Luce, at an event in Rome, but investors seem to take a sell-the-news approach. In the retail space, AutoZone led the S&P 500 losers, dropping over 8% after reporting third-quarter net sales of $4.84 billion, which missed the consensus estimate of $4.87 billion. That also dragged down competitor O'Reilly Automotive, which fell more than 4%.
And we also saw some software and tech names under pressure.
Indeed, Intuit dropped over 4% after Mizuho Securities cut its price target on the stock to $500 from $600. But the biggest drop of the day belonged to cloud security company Zscaler, which tumbled 16%. Even though their fiscal third-quarter earnings and revenue beat estimates, their revenue guidance for the current quarter came in just slightly below what analysts were expecting. And in this market, any slight miss on future outlook gets punished severely.
Thank you for walking us through such a jam-packed day of market action. That brings us to the end of today's episode. If you find this useful, please follow Market Brief After Hours on your favorite podcast platform.